How's it going, everybody? It's Brandon here. So I wanted to go over an analysis I had for this trade on this pair. This is EURUSD, and I was looking for a reaction to kind of continue my bias of the market being bearish. So looking for short opportunities, and I back tested and I found this last point of interest, and we see this huge green candle before this huge impulse down. Now, this area uh, is somewhere I put alerts, and I even put a horizontal line to kind of remind me when market is currently at this point. So why we look at this area is because it is the reaction that tells us if the market is going to respect it or if it's not. So if we wanted to continue bearish, market had to come back up here and have a reaction off of it. And it did have points of which it needed to take care of, like this liquidity pool up here. There's a ton of money up here that the banks and market needs to take out in order to keep price moving back bearish. And how I kind of confirmed that at my higher time frames is we have this big push down, and we have lower highs and lower highs, and eventually lower lows. But we keep floating around this area. There is a bunch of liquidity that was created down here, so this gives me even more bias that market is going to keep driving price lower, and that's why we looked into that candle on the 1 hour. So have my alerts here at 09650, and my horizontal line here at 09750, and it actually perfectly aligns with the quarters theory. Quarters theory is 25, 50, 75, and those are usually psychological numbers that market has a strong confluence with. So we saw market had perfectly reacted off that, off just a touch and perfect just reaction. And if we dive into smaller time frames, we can even see the market structure. So if you didn't get in right at the touch of this, you could have gone in right over here. And why I say that is because if you look at here, this is that last up candle before that push down. Same thing that we saw in the higher time frame are back there. And market comes about to the 50% area, and if you go into smaller time frames, you can see that it comes back right up to this wick. That's really close. You could have missed it, but nonetheless, it did have a reaction off of it. And if we look at two different entries, say we got in over here, or we even place a sell limit right here. Move stop loss. Not too high. I like to keep it between 10 and 12. So I'll put it at 12. And I expect price to come back down to at least the break of this structure right here. And it lines up with the middle of this imbalance. So at this point, I will take partials. Currently, it's in, if you entered up here, it's about 48 pips in profit. So 1 to 4 about. So it's a good trade. We're looking for those high risk reward trades. I will probably hold this trade until it takes care of most of this imbalance. Even down here, we have this liquidity that we can aim for. So you just uh, trail the stop loss. I'm already in break even, and we're just kind of watching what price does as it takes care of these imbalances. All right. Thank you guys for tuning in to this analysis. Hope this was helpful for any of the new traders out there. Please like, comment, subscribe. I might be doing more of these. And yep, have a nice day.